Okay, I believe the meeting is live streamed. Just dilly-dallying for a little bit until it's confirmed. This is the Investing Power Hour on Chit Chat Money. This is number 88, although that we just kind of just keep counting into perpetuity. My name is Brett Schaefer, and I'm joined as always by Ryan Henderson. We're talking whatever we want in the financial markets, investing stuff, business, finance. We do these live on YouTube. We'll probably, once we get to the new year, try to figure out an exact time that we're going to do these. I know only a few people do join us live, but I think it's nice. And some people probably want the consistency in there, but we'll try to find the exact time where we can typically do these. But Ryan is, as for anyone that doesn't know, started a fun new job. So he's trying to figure out that schedule exactly. But Ryan, how are you doing today? I think, it's a sad day because Bitcoin is above 40,000 again, huh? It's a sad
Oh,
day
is it?
for
I missed that.
everywhere.
Yeah, I don't-
It's
it's pretty
interesting. No one cares
insane.
anymore.
Well, it's interesting. Yeah, not a lot of people care, but it's interesting that this is happening when it doesn't feel, at least like with like my peer group, my friends, the people that were previously into Bitcoin, like it doesn't feel like it has that allure, that like attractiveness and everyone talking about it kind of thing. Like the hype is gone, but the price continues to elevate. When it first hit 40,000, like what was that, 2 years ago now? It felt like the whole world was talking about it. I don't hear that at all anymore. And it's funny that this has happened after a bunch of whole like high profile bankruptcies, some a lot of capital being pulled out of crypto, especially investments from like venture capital. I don't know. I just find that kind of staggering. Maybe isn't there something about the fact that it's like a little more thinly traded now because like a lot of people lost access to their crypto? Like, isn't it some like 75% of it's like 75% of Bitcoin's like no longer in circulation because like it's lost accounts?
I think that might be 25%.
Okay.
But yes, I think 25% is estimated to be quote unquote unaccessible, which is great. But I think you are on to something. Well, maybe not even onto something. This is something that's been studied, reported on for a while, is that there is quite a bit of wash trading within the crypto world. So you just have seven or eight entities trading back and forth, and oh wait, hey, the prices are ripping. This is this is the future, guys. Look at this. Look at all this activity. But that's really it. I don't think we need to talk about it. As I said, no one seems to really care anymore. But I thought it was just a sad day. We're seeing lots of emails, lots of tweets. Everyone's coming out of the woodwork. Jack Dorsey, Brian Armstrong, all the good stuff. They're like cockroaches that are coming out of the floorboards. I didn't even look at the document today, but did you have any topics that you wanted to go through? I'm gonna pull it up right now.
Yeah, I got a couple. I mean, the big one and the one that we kind of talked about, and I don't know if we called it, but we were definitely speculating about it, is that a lot Hawaiian Airlines was acquired. Uh, it was by Alaska Airlines. We thought we kind of speculated it was either going to be by Alaska or one of the big four. And we did a show on Hawaiian. And I mean, the gist of it is that it was doing $6 billion in revenue. It had a loyalty program with a lot of members on it. It had card holders that were frequently flying and racking up miles on Hawaiian Airlines.
Good brand, decent brand.
They had the routes that they were operating, which is a little harder than to just, you can't just like up and add routes that easy, as it, even though it might seem like you could. And it was generating $6 billion in revenue. It had like $150 million market cap because they were losing a lot of money. I'm getting that right, I think. Maybe it was 250 million, but it had a lot of debt on it. The So our speculation was like, okay, this could be worth nothing because they could, have to default on their debt, but this is worth something to other airlines because there's a lot of brand power here. there's a lot of value. And if it can be run more efficiently or by someone who can kind of bear the weight of some of the losses for a little while, that it's going to be really valuable. And so Alaska Airlines was the one that kind of bit the bullet here. I think they acquired them for $18 a share in cash, or well, it hasn't gone through yet, but the offer is for $18 a share in cash, and Hawaiian was trading at like $4 or $5 a share in cash. So congrats to all the Hawaiian holders. I will say it's not been a fantastic investment if you've been holding for a while, but if you bought within kind of the last 6 months, you're sitting pretty right now.
Do you want to guess what the 12-month return is for Hawaiian Air stock as of this recording? I have it loaded up here right now.
Let's go up 5%.
It's up 2%.
Okay.
So if
I
you
remember
see
seeing it
just,
was like not up that much on a 1 year timeline, but I mean, it had like what 80% drawdown or something like that over the last year
yeah,
prior to this acquisition.
yeah, and from all-time highs, much worse. It's an interesting acquisition for sure. Alaska, like, seems to be quite a well-run business. If you're not on the west coast of the United States, or probably even the Pacific Northwest, the credit card is really huge. Like, so many people have it, and like, yes, airlines aren't the best businesses in the world, but after listening to some of the old Munger stuff with him passing and then having that interview come out, that was pre-recorded before his death, he talked about the railroads, as he always does, about the transition from bad businesses to good businesses. If there are only a few airlines left and it's really hard to get into the industry and there's not really any competition, I don't know. It could. I feel like they could transition to being better businesses. Maybe not great businesses, but I think they could transition to being better businesses.
Yeah, I still don't
That's a little
think they're
different than
rock
this, but
solid. It's still like, even if you do have the miles and the big credit card bases, if you do start to rack up prices, which is ultimately going to be the one of the big ways for them to grow. Like, let's say there's four big airline or four big airlines in the US. I know that's not what it's going to be. I think it's probably going to culminate in like five. If there's four, what are they really going to do? I think they'll, in order to generate good returns, it would have to be that they kind of raise prices on their routes over time at above the rate they have in the past, which even if you have that big installed base of cardholders and loyalty members, I think if if a discount airline came along that didn't have that installed base, it could still win a lot of share. I think it's still competitive, not as competitive as it once was because of the cardholders, but I'm reluctant to be getting into airlines unless they're trading at ridiculous, unless they're distressed, like maybe Hawaiian.
yeah, no, it's not the exact same as railroads for sure. I mean, it's consumer facing. It's a lot more in the public eye. There's you got to deal with
You can
airport
add
concessions.
you can
What?
add you can add new routes. You can't add new railroads.
Well, if someone gets locked into a certain gate, at a certain airport, right? There is something to be said there, but it's not like they own the airports. So, a little different.
Right. I mean, you have to bid on the. I can't remember how the pricing works. It's like a percentage of each ticket is just given to the airline, right? And you have to pay for gate access. But I
I'm
think
sure
as long as
countries it's different in every country, I'm assuming. Yeah.
I wouldn't be so fast to like call this an investable industry quite yet.
Yeah. The
At
credit
least
cards
at
have been nice for them, but
yeah.
I don't think you can't just be like, well, our main business isn't that great, but we got this side business that's going to be decent. Yeah, the travel credit card industry seems hyper competitive outside of Amex. Question from Tyler: are you going to play the inevitable merger arbitrage when the DOJ sues to block the merger? Do you guys think if JetBlue and Spirit go through, you will see more mergers between smaller players? Follow up, I guess, kind of related. It appears the market values of unprofitable, barely profitable companies, cash flow. So that, I think what you're saying here is The market is valuing these unprofitable companies on cash flow, so giving them a severe discount. But the mergers are being valued on their assets. It might mean some small, unprofitable airlines might be cheap. I own a very small, currently unprofitable airline that I think is cheap. So I agree with you there. But on the other one, if we look at what it's $18 a share, right, for Hawaiian. Is that the price? Maybe you can confirm.
Yeah, sorry, I'm looking at it right now.
The current price of Hawaiian Holdings, 14, just under 14. So clearly people don't think that it's a high likelihood that this goes through. I think people are worried about the Hawaiian routes from Seattle, San Francisco, Los Angeles, that Alaska might, they might think there's a monopoly there of kind of, especially from Seattle, I'd say, as I don't think Southwest is going from there.
I thought they were.
I guess I'm not an expert on all these routes, but they might argue that there's only two players left with Southwest and Alaska there, and you wouldn't want to go from a 3-player to a 2-player industry. But I don't know. I don't know why
still
this one
still the fifth large, still either the fifth or sixth largest domestic carrier.
It's not like Southwest buying it or Delta buying it. Yeah, this it
is.
Look, there could be some legal stuff.
Monopoly. I could see that argument. I think this will probably have more difficulty passing than the JetBlue Spirit one, based on our conversation with Andrew Walker. But it's still, I still kind of look at it as we're really going to prevent the 7th largest domestic carrier from buying this 8th largest or whatever. Like, I don't know. It feels kind of like pointless. Like, let them acquire each other. Because I imagine that it's got to be possible for Delta or American or Southwest to add those routes from LA to Hawaii, Seattle to Hawaii.
Well, who killed Hawaiian? Southwest.
And probably Alaska to some extent, yeah.
Yeah, it's a little bit of an extent there. Yeah, Tyler says Alaska and Hawaiian have much more market overlap than Spirit and JetBlue, so they'll definitely suit a block. I did read that they only have 12 or maybe it was 8 overlapping routes. So I think they could do some sort of.
Yeah, but they don't have that many routes. Like, there aren't that many routes to Hawaii to begin with.
But I think, honestly, they can make a pitch that it's going to be beneficial for the consumer, because then they can say, look, we have these West Coast Alaska kind of core customers, members who might be, I'm one of those. Who, okay, hey, like, we're a Hawaiian partner now. We can offer them better deals to go to Hawaii and then also to Asia Pacific, because that's a big part of Hawaiian's business, is going from the Hawaiian Islands out towards Japan, Australia, etc. But
yeah,
who knows? I think it's too early to tell, but it could be a fun, I think, merger arb opportunity. I think what's interesting is Hawaiian's still going to operate, right? And there was a decent thesis. I wonder what in the deal the breakage fee is going to be, because that could be extremely helpful if Hawaiian, like, the deal breaks in Hawaii and trades back to like $5 a share and they have way more cash on the balance sheet.
Yeah, I mean, that could be the difference between them surviving or not, or having to go into Chapter 11. I would be surprised if the break fee is like bigger than, I don't know, 150 million.
Were you surprised that Alaska wasn't able to get them at a lower price?
Yeah. But there is Hawaiian is a lot more valuable under Alaska, right? Because
I think so, yeah.
Okay, first of all, there's value in the planes. They own majority of their jets. I think they lease a couple from Airbus, but for the most part, they have actual physical planes that they own. They have the I don't know, experience of operating those routes and the consumer kind of mind share when they go to Hawaii to book with Hawaiian. That's really valuable. And part of the problem right now for Hawaiian is it seems like, and it always feels like this with airlines, there's some supply chain issues, right? They weren't able to get all their jets up and running. One of their big airports was not fully operational for a while. Um, they were having some engine issues with Pratt and Whitney. That they weren't able to get those jets into operating in the fleet. So a whole bunch of like short term stuff potentially, but they're running low on cash and they can't burn that much cash for a while. But if they get back to profitability levels that they had, I think they were earning like 200, $300 million and kind of between 2015 and 2019, 200, $300 million a year. I mean, Alaska has the ability to wait longer than Hawaiian does on their own. So it doesn't, I think Hawaiian probably knew that. But at the same time, yeah, I guess 4 times roughly the current stock price seems like quite a
Yeah.
buyout for a business that's in distress territory.
Yeah. I, I mean,
Because you're not really
distress
buying it at a
distress
distress
might have
multiple.
been distress might have been it might be a bit of a stretch because they had multiple years of cash on the balance sheet. Just it wasn't distressed in the next few quarters. It was more
Unless
of a
things
2 to 3 year
get
time.
worse.
Yeah, sure. Unless things get worse. Yeah. The
It,
Japan customer is really screwing them, not going back to Hawaii. But
yeah, I
we
remember
don't need to
that.
relitigate everything of Hawaiian Air. I think it's also important is merging the mileage plans because those subscale mileage plans really struggle versus the big ones like Delta, United, etc.
Yeah, you got to be quite the frequent flyer to Hawaii for that to be worthwhile. But
Yeah.
I mean, if you're just a West Coaster, if you can get the mileage plan lumped in with Hawaii routes or Hawaiians routes, that'd be pretty sweet.
Yeah. And yeah, they do have and yeah, airlines is tough because I don't think I would buy like Alaska or Delta or American because I mean, they're just tough businesses. Time and
Can
time
you
again, they've
ever
proven that they're tough
guess
businesses.
what they're gonna earn? Like
Yeah, exactly.
it's so unpredictable.
However, it seems like Alaska's operating fairly intelligently. One, they basically killed Hawaiian's business and then bought him out, which is not a pretty seems like a pretty savvy move to me. Second, they somehow are partnering with like that One World Alliance thing where you can just use their miles for American flights, so it's like really helping keep them if there's going to be anyone that I think makes the leap to being one of the next big four airlines, I would bet it's Alaska. I mean, they've really they started out from basically nothing 30 years ago, and I mean, they just continue to grow.
Yeah.
Could be a fun stock to research for the show, but I know that no one really even likes doing it. No one even
I
likes
don't want to
covering
do it.
airlines. Yeah.
I don't want to do Alaska. The I'm glad we did Hawaiian. I wish we would have trusted ourselves and said like, well, this thing could go bankrupt, but it's probably worth something to another airline. The I want to switch gears though because we've gone long on
One question
Hawaiian
from
here.
Tyler. One follow-up from Tyler. I think he's referencing the consolidation thing. Do you think that he is asking, do you think that was Buffett's pre-COVID thesis that things would consolidate to higher returns on invested capital? I think yes, but he admitted he was wrong.
Yeah, and I also don't think he was wrong to sell. Some people kind of gave him a hard time for that, but I think at the start of COVID, that probably was the right move. I don't know how much the stock is up since then, but they've still kind of struggled. Let's
Okay.
I want to
Next
hop into
topic. Yeah.
Spotify layoffs.
Are you
I
disappointed that we're the well, let's go through it and then we can talk investing. You go through it first.
Sure. Basically, the gist of it is that they are laying off 17% of their staff. I saw some figure that said this will amount to like $350 million in annualized savings. Obviously, it's gonna take a while for this to trickle through in the income statement. Basically, they said, listen, capital isn't free anymore, and we have to rein in our costs. And I don't know. Some of it was, and it's never really, there's no, what's the term? There's no such thing as a diplomatic hand grenade. I don't think there's any way to properly tell people they're being laid off. but it felt like there was some finger pointing to like the economy, like the global like interest rates. And it kind of to me was like we talked about this yesterday where what's that show? I think you should leave or whatever. And the guy's like, it's the meme of him being like, we're all trying to find the guy who did this. And it's like they
Yeah.
let their costs get out of control and now they have to rein it in. I think if you're a Spotify shareholder, it's hard not to like this because it seems like they are trying to take this whole year of efficiency thing seriously. But at the same time, they invested in a lot of things with kind of reckless abandon, especially in the podcasting realm. And I would raise some serious concerns if that's going to be like the strategy moving forward, where rates are cheap or rates are low. We're going to plow money into everything we can find with, and we've seen tidbits where they were not cognizant of the costs. They didn't care about the costs associated with some of these podcasting deals. And then they're just going to rein it all in when rates go up. I don't really want to go through that cycle over and over if I'm a shareholder.
Yeah. I think one thing is with this letter, I think investors should understand who the audience is here. They're talking to the journalists and the employees, and they want to just make as best sounding excuses as possible so they just don't get bad rep. And that's what they got to do. Look, I think for the investors, you should just listen to the CFO who goes to those investment conferences about 2 or 3 times a year. He'll say more straightforward, look, we just needed to cut costs. And I think it's pretty clear. With this, yeah, it's a good thing. I think on the expenses stuff, yeah, I mean, look, they had 3 to 4 years of ballooned expenses. They were overspending on stuff. They weren't listening. It's definitely something you can't forget. They did fire, essentially. I would guess that they fired that podcast content person that seemed to not care about costs, which is good, I think. And a lot of their stuff has been successful within the
Here's
go ahead.
here's my issue is that people can point to the podcast content guide not caring about cost. That comes
Women,
down
but
to
yeah, yeah.
sorry, woman. Not that comes down to the executive team. If you give them the liberty to not care about costs, they won't care about costs. I'm
Yeah.
guessing the bulk of her compensation is associated with her pay at Spotify and not being a shareholder. So, like, I don't think she's in the wrong here. I don't think she necessarily. I don't know if I would have done anything different if I were trying to dominate the podcast category. Maybe I wouldn't have done so much like celebrity type shows, but I think they made some of the right choices. They just like spent way too much doing it.
Yeah. I mean, those celebrity shows of just like, hey, celebrity or a celebrity,
It never
they have a
works.
podcast now like that never works. The existing shows make a lot more sense, and I think they've done quite well with that, even if they had to overspend a bit to get mass market and to become the the market leader. 17% is a lot of people. It hopefully it's kind of the last one, and hopefully they just don't start aggressively hiring people again in kind of a Google or Alphabet fashion and just saying, well, I guess we just hired all these people back in a couple quarters. But kind of think they're going to start printing a lot of money. What do you think?
Yeah, maybe. I wouldn't be surprised if they turn around and we're like, we found this new area to invest in. AI. We're investing a lot of our resources in hiring across AI because it's going to revolutionize the music industry. I would
Well, they
hope
already did
that
that.
they've learned their lesson.
I mean, what do you think they've spent on these AI stuff? Quite a bit. Quite a bit. And
Yeah,
the products have done seem to be doing quite well, I'd say.
we'll see. Okay, over under 10% operating margins 2024.
2024. Oh, under. I mean, I think it's guide for 2025, right? 10%. So under. I can't remember exactly either, but I'd say under.
Yeah, that's probably fair. It's a bummer they weren't. I don't know. It's a bummer they weren't doing this when I was still a shareholder, but
Well, I think that's yeah. I don't know.
not like
It's
no, it's a
a
bummer for me that they weren't doing this when I was still a shareholder because maybe I would have seen like the light at the end of the tunnel here. But it felt like because coming into this year, they talked a lot about like efficiency and like being resourceful and maybe cutting costs. And we didn't really see it until basically the last couple of months. We really started to see it trickle through in the income statement. And I think it was just wish I would have uh, wish I would have stuck around a little bit longer. But it seems like they're finally putting their actions behind their words with the whole resourcefulness, efficiency stuff.
yeah.
How would you
The oh god.
how would you deliver news like this?
I I don't know if you
Oh,
can do much better than Eck did here. I mean, you can quibble with some of the word choices. I like how he was saying essentially we just have a lot of people doing work around the work, which I was like, hey, does he listen to us? Because that's one of the things I like to say is we need all these people to manage all these people. Uh, but like he's talking to the employees, you're firing 1,500 people, you're disrupting their lives. You got to try to be as focused on them as possible and saying taking ownership of the mistake and saying, look, we like things were different. Yeah, it might be a hollow excuse to say that the cost of capital is changing things because I don't know if that's actually the reason. But it's hard to say like, look, we hired too many people. That's it. You got to try to hopefully explain it with people. I would have no idea. Is there a good way to do it? No, I think the best way is to not is always be a little behind on hiring, right? Like some of these companies say. Does Netflix ever do a layoff? No, because they are very, very efficient with how many actual numbers they have on their team.
Tyler says Google's employees started sweating when they read X letter. See, here's the
And
thing.
and Salesforces.
The Salesforce has gone through this. I mean, they did a big layoff with the activist stuff, right? 10% of
Did
their
they
staff.
they've done some layoffs, yes. I want to table that. There's some funny stuff with Salesforce, but can continue with Spotify. Hit that next.
Like I'm thinking if I'm an employee at Spotify, and even kind of reading this letter, it made me, I don't know if it was like inspired, but it makes you think like, I don't want to be in that situation. I don't want to be one of the people that gets laid off. And it kind of, I would imagine, inspires you to work a little harder. When Google
Right?
announced the layoffs, they were like,
Protests.
that did not seem like the reaction. It was like, how dare they? They just care about the shareholders. Like, yep,
Yeah.
that's what's going on.
I know. I gotta
There was
say the big.
protests. It's like, okay, who's going to be the next people that are laid off? Probably the people protesting.
I know the. I gotta say the big
It's
tech
not a
employees.
nonprofit.
Yeah, the big tech employees are some of the. Or what was the word everyone uses? Entitled. I gotta say they get a little bit of entitlement. Those are some of the best jobs in the world. But yeah, I think it should motivate people. Like Netflix has an interesting one. I don't know if I could find it off the top of my head, but I've seen it float around from time to time about what they. I'm pretty sure they probably say this to everyone that they're hiring. They posted, I think, on the investor relations page is like, we're not a family, we're a team. The team is trying to win, and we're going to have people that support the team and contribute the most to the team the best. But it's not about hiring people and being a part of the family uh, because we're here to try to win. Like, if you're not supporting, we're going to cut you. And I like that approach. Like, you can't just go in and say, oh, we're all one big family. Oh, it's all right. It's not. You have that outside of work.
Yeah. Netflix seems to be kind of the most blunt about it. They, I mean, they state it from the get go. They're like, listen, we not only want to be good at hiring, but we're gonna there's value adds in firing too. Like if you're not contributing enough to the team, like we're gonna try to be methodical about firing as well. And they actually, I
Yeah.
think there's like spots on their website where they talk about that. the difficulty, I think, if you signed on as a Spotify employee or a Google employee, is there is that talk about family. It's like the you're
Right.
part of like the Google Spotify family. Like we're building this together, and it's like for them to flip the switch and say, well, they raised rates. What are we gonna do? Now we're a team. Like, go get another job. It's kind of like then I'd be a little more frustrated. But if you're at Netflix and you kind of know it going in, I don't know.
Yeah. Yeah.
It's an
The
expectations thing.
Yeah, I think what's interesting is Netflix is like, look, we're paying you guys like professional athletes. We might be a little bit harsh in treating you. Kind of, it's not the perfect analogy, but it might be a bit cutthroat if we're paying you $500,000 a year.
Yeah, yeah, it is.
Did you ever watch the BlackBerry movie when they offered everyone $10 million a year to switch to them? Did you see that? No,
No.
you should watch it. They did it. They cheated though. They offered backdated stock options, but I think that's a whole nother thing. The Salesforce, another company in this category, right? Did you ever see the conference call with Mark Benioff? I think it was the latest one where they talked about their adjusted operating margin hit 31% this quarter. And he was on the call and they're like, wow, like you're really hitting your profit numbers. What happened here? And he was like, I'm just surprised and shocked at how profitable this business can be. And it's like, we didn't even do that much. And we're just so profitable. For example, they did an ad on the Orb in Las Vegas, which also Autodesk did. If you didn't see that too, that's nice.
What a stupid
Give you
ad.
some money.
Sorry. Probably for
Yeah,
both businesses,
ridiculous.
but I imagine it's specifically for Autodesk. Like, who are you? Who are you targeting?
Apparently, they had the major conference in Las Vegas that um weekend, but still, like
Well,
that was the reasoning. Is like they wanted their clients to, and the architecture clients coming in.
well,
It
it's
still doesn't
awesome,
make
but
sense.
they already they already came to Vegas for your conference. I think they know who
I
you
know. I
are.
think I think they're aware. Yeah. Okay. Okay. But they said, wow, like Salesforce is like, wow, 30% operating margin. How is this possible? It's like, okay, one, do you not know your unit economics? Like, it's software, man. Two, can you give a prediction on what their GAAP operating margin is?
18%, I think I saw.
Damn, pretty good. 17%. That's an approximate 14% gap. Actually, exactly 14% gap. We even go to decimals there. So, whoa, hey, we
Who does
got
he
to, our
care?
profit margins are above 30% if we just don't include stuff. I love the classic one. So, someone on Twitter always says this, where it's like, look, companies need to hire me. And when they say our adjusted profitability is at this number, we missed our target. All I need to do is tell them, look, just adjust it further and we can hit these numbers. We just take out more stuff.
Yes.
It's incredible nonsense, but
I
sorry,
really
I'm
don't
rambling.
get it. Like, if you're Benioff, you're a shareholder, a pretty big shareholder. I think he owns, what was it, like 3 or 4% of the stock still today? And you're selling constantly. Why do you care so much about this number? Like, why?
Adjusted operating margin or
Yeah.
oh yeah.
Like, you're a big shareholder. You know it's not real earnings.
It's not a distressed stock. It's not like you're trying to prove to Wall
Seller.
Street anything. Well, maybe they are trying to prove to Wall Street something, but you don't need to like prove something to get financing.
I know it is kind of funny. So, like, it felt like 2 or 3 quarters ago, Benioff on the calls was talking to uh Elliott Management, more or less. They were like, "Yeah, we got to get more efficient. We're taking some tough steps," and basically saying like what Elliott kind of needs him to say. And now I don't know if Elliott's backed off or whatnot, but he kind of, I don't know. Benioff's back to being the original Benioff because 2 to 3 quarters he
Stocks
was
up,
like,
stocks up.
I had some
It's the
real
summer of AI.
self-reflecting. And
Yeah.
after some real self-reflection, I think we're gonna have to cut some costs. It's like
Yeah.
self-reflection, or
Well, we just went through the summer of AI, Ryan, and
I
they just
laugh.
had Have you been to Dreamforce? It's a family. It's a whole.
Yeah, talk
We
about
got we
family.
got to get we got to fly all these remote people from around the country into San Francisco to party for a week at the Salesforce Tower, which is the biggest waste of money in the entire industry. And then we need to make $10 million commercials with Matthew McConaughey that make
Yeah.
absolutely no sense and plaster them across the most expensive ad slots in America. Football games. Let's do
How
that. Beautiful.
how hard do you laugh every time you see that McConaughey commercial? It makes no
Oh, I
sense.
love it.
Just him in the
Oh, I
forest
love it.
surrounded by squirrels and then being like, we gotta trust our AI. And like it's gotta be the most pointless ad
No,
of
the
most of them I can think
second
of.
IBM Watson X.
Yeah,
What
that's
can
true.
Watson X do? What can Watson X? Remember when they had that football player and there was every football game. They're like, "What can IBM do for your business?" It is whatever. The ones I laugh at though are when they do the AWS ones when they're like, AWS is doing trillions of simulations to get the NFL schedule, and then they're like, think of what AWS is doing for the NFL. Think of what they can do for your business. And I just think of the people on the couch like, yeah, my IT budget should go to AWS. We could AI up this. I'm just some small business, but let's AI this thing up, dude. We need that. They use AWS. I love my
Yeah.
team. But
I
I
think
think
like with AWS, I
Salesforce
think
or
with
go ahead.
AWS, I kind of sit there and think like maybe they're trying to masquerade profits or something like that. Maybe they don't want to be ridiculously profitable. But with Salesforce, quite clearly over the last year, it's been like, let's try to be, let's try to be profitable. Let's turn on the operating leverage. So I would imagine the McConaughey commercials are one of the first things to go because it
Yeah,
doesn't
well,
mean anything. It's not like people, I'm guessing, I don't use Salesforce, but I'm guessing most of the people that use Salesforce are getting all these stupid AI cross sells and they're like, dude, get this out of my freaking interface. Just let me use the platform. And they're just trying to
yeah. I
upsell
mean,
all this AI crap.
I know some people that work at Salesforce sales or did, um, and they're so frustrated at all the AI like primers they had to read about and all the stuff they're trying to sell people. It's yeah, I think the difference between what makes like AWS an attractive business to me from a culture standpoint and Salesforce not is that Salesforce has to be pressured to try to focus on a margin number. And they're just like focus on these arbitrary targets when really what matters is generating cash flow, generating returns on invested capital. But AWS, I was just listening to a podcast this morning, actually, funny enough, with the CEO who's there's like that Norwegian sovereign wealth fund that basically says, look, we own every company in the world, so everyone's got to do this podcast with us. That's why they get the greatest guests, like that Ryanair guy, which is funny. I think, like, as a side note, they said at the beginning that the sovereign wealth fund of Norway owns 1% of Amazon. But let me look at, okay, 1 second. So they said that if you divide it per citizen in Norway, every citizen in Norway owns, I think it was 15,000 Norwegian kroner of Amazon, which is almost $1,500. So not bad. Not bad if you're in Norway.
Good for Norway.
Yeah, they do it right with that sovereign wealth fund. They're quite good at it. But besides the point, they talked about like focusing on what their customers want, focusing on efficiency, focusing on like getting economies of scale, reducing the costs, and then the profits will take care of themselves. Like, I don't think AWS is going, look, we want 25% operating margins this year. Look, we want 30% operating margins this year. They're like, no, we're focusing on those things and the profits will take care of them. Yeah, that's kind of what I
Yeah,
think. And
they
that's what
kind of
makes me like that business better.
feels like AWS kind of knows its North Star and everyone is cognizant of that when they're making decisions. Whereas Salesforce, it seemed like they had like a come to Jesus moment this year when they were like, oh, wait, like, oh, we're supposed to be making money. Like, yeah, I guess we should make some decisions to start making money. But
Yeah.
it still feels like there's so much waste to that company. Whatever. I want to talk about a company where there's very little waste, British American Tobacco. Uh, did you
Yeah.
read about you're the first one that mentioned it to me, but did you read
I
about the Goodwill
read
write
the
down?
press. Yeah, I read the press release. Yeah, they do. These British companies seem to just do their Q3 and Q1 updates, which just give various data points that they want to give. And they're doing a fat goodwill impairment on the American operations, which, and I think it was 30 billion, 25 billion you wrote here. Either way, quite a large number. It's probably being overhyped though, because this is not actually nothing has changed. They just bought Reynolds American or whatever it was called. And you have to put the goodwill on your balance sheet. And sometimes the auditors come in and say, look, what is the value of this thing? And they said it's much lower. They have to write it down. And honestly, this is basically what we had expected. We've just covered British American Tobacco and Altria Group on the podcast. Go listen to those for the full analysis on those episodes. But that's right. We'd already really did this change anything for you? Because it seems like I was already pricing that in.
Yeah, it's kind of strange to me that the stock fell 9% after this. First of all, like I don't think anyone that owned this stock was owning it for Reynolds and what are some of their other American brands? Uh, I'm blanking on them, but
Well, that's the
American.
parent, that's the parent company, Newport Camel.
Yeah, I don't think they were owning them for the goodwill that sat on the balance sheet. I think pretty much everyone knew that these businesses were in kind of terminal decline. So they see the results every quarter. And it's not like these auditors are seeing something different, I imagine. It seems like they probably just finally, the time came where they had to write it down. The other part that I thought was funny was British American Tobacco fell 9%, and then Altria fell like 3%, which maybe you can make a case that if there's something in the write down that is attributing like bigger volume declines than expected, then
Right.
it impacts Altria as well. But Philip Morris declined, and Philip Morris doesn't have an American cigarettes business. So why is
Oh,
that down one
I
and a half
didn't.
percent?
Interesting. Yeah. Yeah. And I don't think they changed guidance too much. I mean, the US market is a big struggle. And we'll probably get to this, I think, because I have a tweet from one of our, let's say, colleagues in the FinTwit universe. Yeah. I don't honestly think this is a big deal. And if they can use the tax write-off as an advantage, some sort of deal, like, look, it's probably good. Write it all down. I don't care.
Big goodwill write down, less taxes, stock drops, bigger buyback. Formula
Bro
for
down.
success. Bro
Yeah.
down.
Yeah.
If
All
you
right. Here's what
combine the dividend yield, which currently sits at, I want to say 9.3%, and the buyback, they've got like an 11% shareholder return yield. You can also
I
include kind of the net debt, but I don't know.
breaking news, Ryan. The dividend yield of British American Tobacco is 9.6%.
Really.
So,
Someone
and it's up
said
1.6.
I I mentioned this, and a bunch of people were like, "Yeah, it's a trap, though. The dividend will get cut." And it's like, why would the dividend get cut? They weren't paying it out of their goodwill.
I know
They're
exactly.
paying it out of their cash
Exactly.
flow. And they're like, yeah,
Yeah.
but what about the debt? It's like they're paying that down too.
Yeah, I
These
know.
like nothing happened here in the last month or the last quarter that surprised management, would be my guess. Like nothing
Yeah.
fundamentally in the American cigarette businesses like changed, I would guess. I do think the disposables is a problem for them. And I
Yeah.
still I expressed some of these concerns on our last episode that in America right now, it seems like the volume declines make these a more difficult investment than they've been kind of in the past. Like at 10% volume declines, it starts to get a little more difficult to shake out the math to revenue growth. But
Yeah.
that I don't know. I wouldn't be. It's not the Goodwill impairment that would be worrying me.
Yeah. And what was it, a month ago that we did British American Tobacco? Maybe less, honestly. I can't even remember at this point. I don't think anything's changed from that episode, which is quite interesting. But we'll say from one of our FinTwit colleagues, this is the tweet. He's got a private account now, so might not just say his name. One thing I will say about British American Tobacco, they have a comment on being 50% smokeless by 2035. For more context, they say that now their goal is to have 50% of their revenue in 2035 from non-cigarette business, essentially. And he said that's a long ways away. Philip Morris International is going to be 50% for these new categories in 2 to 3 years, meaning Philip Morris is kind of light years ahead of this field. Now, if you look at kind of the stock charts, Altria and Imperial, the total returns over the last 10 years have been way better than Philip Morris International. So, like, even if they're light years ahead, the stock chart actually hasn't done. The stock hasn't even done better, but it's quite interesting to think about. I think what's interesting is they could definitely hit this 50% target, but you know, like that the Anakin and Padme meme, where it's like, and it's gonna be from growth of smokeless, right? You know, because I
Yeah.
wonder if the cigarette business collapses by 2035, then they could easily hit 50%, right?
Yeah, it is a good point. The Philip Morris uh smokeless becoming 50% of the portfolio, they're doing that while volumes of the cigarette business are basically flat. Maybe they're down a little bit, but they're not seeing steep declines like a lot of the American cigarette manufacturers are. Whereas British American Tobacco is saying 50%, and they're nowhere near it, while the cigarettes business is declining quite sharply. So I would say, I don't. It feels like Philip Morris is kind of light years ahead on these newer nicotine initiatives, and we've talked about that before, where the returns are different. The return profile has been way better for Altria and I think you said Imperial, but then Philip Morris. I can't help but think it looks a lot different over the next 10 years. And part of that is because cash from Philip Morris has been invested into things like Swedish Match and
ICOS.
ICOS, and building out these much better businesses that should be major cash flow drivers for Philip Morris over the next 10 years. And hopefully that cash flow will continue to get dividended out and bought back.
If only they didn't have the darn currency exposure. That's a big.
So does
it's
everyone.
A big one. No, not Altria. No one
I know,
look,
but
Philip Morris.
just
The currency exposure for a company like Philip Morris International is legitimate. Yeah, and geopolitical too. Yeah,
is it
Russia.
is it
Yeah,
legitimate
Ukraine.
for
You got Belarus. You got the Middle East. You got Pakistan. You got like a lot of the revenue comes from markets where you would not be shocked if the currency devalued by 100%.
I don't know. I kind of hear that. I think like, how's it any different? Or I think, how's it any different for some of the other stocks in our portfolio? Like,
Well, like it's just because their exposure is not is to a lot of areas that are not as they're just a little riskier.
yeah, but the bulk of their business isn't.
Yeah, I guess a lot of Europe exposure.
I don't know. Like, how's it different for LVMH? They've got
Well,
whatever 5% currency.
I'd be a lot more confident in the Japanese and Chinese currencies than than Pakistan and Nigeria. To be fair,
Yeah, but I mean, Japan's probably a big market for Philip Morris as well,
that's
right?
true. That's true. That's true. Yeah, they got wide ones. Okay. Anything else on that? We got a couple of questions. I think we could hit. Oh, all right. First one. I think this is a new listener, so thank you, or maybe someone first time joining. Are you guys buying coupon on this dip? Well, I own it. I bought recently. It has, I guess, the last month or so. Sometimes it dips just because the currency stuff with Korea, but I really like this business, and it's what I'm going to keep following.
Sure.
You have never owned it. Was there anything that's a holdup for you?
No, I own it. It's one of
Oh, you
four
do own it
stocks I
now.
own in my Roth IRA. The
There we go. So hey, both buyers now.
Yeah,
Yeah.
after we went over the business, I want to say was that 3 months ago about shares. I don't know, it feels very difficult to displace them in South Korea, and I've been pretty impressed by their wallet share that they've been able to garner and continue to grow, even within their like. You would look at them and you say 34% of the entire South Korean population are active users on Coupang.
If
They
they're
got it.
and that's even not before counting double memberships or you know what I mean, or family use.
Yeah, I mean, as a percentage of households, it's probably much higher. So you would think like what ridiculous saturation, but they've actually been able to grow users in spite of that. Now, some of that might be coming from the international markets, but also that revenue per household and the wallet share they're getting just continues to grow and grow. And I can't remember who had the quote, but basically it was like great management teams and great businesses always find a way to expand their TAM. I don't
Yeah.
think saturation should be the biggest concern here. I think there's ways they can drive incremental revenue and margin enhancing features across the platform that will help deliver good returns, even though, you know, they have whatever 50% already of the available shoppers, probably more in South Korea using the platform.
Yeah, and I like the management team too. I agree with all that. We have a comment here that they are apparently doing good well in Taiwan now. They did mention on the conference call they're going to invest more into that category. That's why their emerging offerings is like losing more money, but they say they're getting better returns than they did in the early days with Coupang in South Korea. So I think, look, the losses will honestly a good thing if revenue is growing higher in that category and losses accelerate because they can weather that for the cash flow that the South Korean operations generate. I think a thought experiment that makes sense to me. And I know a lot of people own C Limited, but I would be much more confident in saying that Coupang could disrupt C Limited or one of the local players in Taiwan versus the other way around. How would, after studying Coupang so much, how would someone disrupt them in South Korea? Seems quite hard. You have to probably spend $10 billion in capital expenditures just to get to where they are today. But then at that point, Coupang's going to be even further and further ahead of you.
Yeah, I mean, you can certainly replace the like digital interface. There's other businesses that do a good job, other e-commerce businesses in South Korea that are also large, but none of them have the vertical integration, at least to not the extent that Coupang does. That's the hard part to replicate. And it's really what's driven Amazon. It's been the backbone of Amazon over the last 25 years. It's given them the flexibility to do so many other things. And that's kind of the hard stuff. And it feels like Coupang's gotten really good at it. So, yeah, like you said, I think it'd be really hard to compete with them.
Yeah. For any listeners that don't know, we have a podcast that we did on Coupang a while back. Actually, not even too long ago. Go listen to that for the full details on how that business operates. As we wrap up here, looks like we started about 5 minutes late. So I think we got about 5 minutes left. Tyler says, any summary thoughts from your defense sector podcast? Do you guys think these companies would be interesting given the more volatile geopolitical environment? I like Lockheed Martin the best out of these, but I'd rather get them at a given the low growth, I'd want them at a pretty discounted price. The aerospace segment for Lockheed seems fairly solid. And then I'm trying to remember, was it Northrop Grumman or was it no General Dynamics? The submarine business also seems pretty damn moody.
Yeah.
Besides that, those are the two solid ones that like have long term. I wouldn't buy it based on geopolitical stuff though. You got to buy it just if it's cheap. Like, yeah,
Yeah. Ideally, you really want to buy it when the geopolitical situation has kind of slowed down.
Yeah, because it gets priced in pretty quickly.
Yeah, I don't know if I really liked the defense sector all that much. Like very good businesses, they're going to be very difficult to replace. But I came away thinking, like, are you going to get that good of returns? Like, will it be that much better than treasuries? I don't know. You're buying it at a time when geopolitical like tension is really high and a pretty steep earnings multiple relative to their history. So I kind of came away with like a little bit less interest than when we went into that month.
Well, yeah. What if I told you that Lockheed Martin stock is down over the last year? Um, Let me give you some numbers here and see what you think, whether the narrative matches up. Today, Lockheed's PE is 16. Let's look at see if they have dividend yield. Dividend yield 2.7. And let's do shares outstanding over the last 10 years, see what it's declined at. A little refresher. It has declined by 22.7%. Those numbers make a lot more sense at a PE closer to like 12 and 13 to me, given the low growth. 16, yeah. Like, I think it's going to be hard to lose money. And if, again, this is a classic example of what's your time horizon? Where are you as an investor? Like, for me at this stage, no, but if I'm older, like, yeah, this is a wealth preservation one for sure.
Yeah, I don't know. Earnings multiple of 16, historical growth hasn't been that great. Like, well, it's been durable, but it hasn't been
durable, but low. Yeah.
Yeah. And share count reduction of 2%. I can't remember what the dividend yield was. Kind of feels like you're getting maybe 5 to 6% returns, mid single digits. Why not take treasuries? That's kind of my
yeah.
If I
think it could be
if
higher,
you were
though.
close to retirement, would you just like really be boosting your exposure to treasuries right now? I don't know if I'd say like the whole portfolio, but if I knew
remember
that I was going to
taxes
need the
though,
cash,
taxes. Remember taxes hit that pretty hard.
Yeah, that's true. I don't know.
Depends what tax bracket I'm in. I'd say depends if it's in a tax-free account.
Yeah.
But I think they've come down. Let's actually look at what 3-month is right now. 3-month treasury yield. Oh, wait. Stupid Google search. 3-month treasury yield. Okay.
5.5.
CNBC
right?
always has. For anyone that wants to know, CNBC is probably the best there. Oh, well. I guess, yeah, it probably hasn't changed just because the Fed hasn't changed. 5.4% still. But it hasn't risen.
Pretty good.
Because the Fed is, saying that they're not.
And inflation was what? 2-3%?
Yeah, and I think if you go even more recent months, like it's 0 now because they do the 12-month stuff. There's all sorts of manipulations with inflation. Yeah, 5.4%, not bad, not bad. And that's why some of these places can offer 4.5%, 5%, 5.5%.
Yeah. Although never mind, that's unrelated. But I was looking through some of those checking accounts because I'm thinking about trying to find a new high yield one. Would you, if you can get a like a savings account that yields you 4.5%, you feel comfortable with the bank? Would you own any treasuries?
Oh, no, I'm not owning any treasuries in general. Like, unless I can find, unless I can't find, like, I'll own it if I don't have any stock ideas. But I think with little money I have, I think I do have enough stock ideas. Only need to have like just 5 or 6, or something like that. Where the cash I have, I'm just gonna have pretty lean, personal balance sheet. The rest will just be in stocks.
I like Munger's approach of just investing with a 10+ year horizon into your 90s.
Yeah, that's true. It's not a bad way to put it.
It's probably not good if you need the money. Like if you're gonna need the cash, you don't want to do that for sure. But it's more fun. It's way more fun to do that for people that are interested and like looking at businesses. I find it way more satisfying to just like keep investing the same way for the rest of my life if you can.
Yeah, it's true. Yeah. Even if it's like not optimal. It's like the people that say, I think I heard someone, one of the, financial writers or something say one time, look, I had the flexibility. I just bought my house in cash. Everyone says that was a dumb move, but I didn't want to deal with any of the mortgage. You know what I mean? Like he was like, look, I wanted to have no busy work, no nothing with it. It doesn't matter to me. That's not what I enjoy. So I eliminate all that time of just managing this mortgage and stuff. And he just bought the house with cash now. A lot of people don't have that flexibility, but I think it's a similar thing. It's like, okay, look, is it optimal for Munger to sit in treasuries? Probably for his family, but what does he enjoy doing? He does that all this stuff. I will say though, he did say on that podcast that he did that he recorded right before he died, he was like, I only have 4 investments: Lee Lu, Berkshire Hathaway, and these apartments and something else. And I was like, Berkshire Hathaway's that's not like, oh, I just own 4 stocks. Like one, Lee Lu is investing in a lot of stuff. And then Berkshire Hathaway is definitely not like, oh, I just own one stock. He was kind of implying that he only has his eggs and he has 4, kind of 4 baskets. Like when people say don't put all your eggs in one basket. Oh yeah, the other one's Costco. And we're going long here, but I don't know. I would take that away and say, look, I only need to own 4 stocks.
Yeah, that was a good interview. I like that. At the end or at one point, they're like, he's like, I think John Collison asked, like, "You're on the board of Costco, right?" He's like, "Yeah, I'm sort of the elder member."
Yeah.
It's like 99, and it's a couple days away from his passing. It's just kind of, I don't know. It's so funny that he was so sharp right to the end, very end. But
Yeah, good for him. Good for him. Yeah. All right. That's gonna do it. I will say if you like our podcast, you should listen to some of our friends at the J Row Show and the Smattering. Smattering's been doing good stuff. And we're gonna actually probably have one of their shows in our feed as a little teaser to go, hopefully inspire you guys to listen to them. But the J Row Show just had Chris Bloomstrand on. Go search that wherever you listen to podcasts and subscribe there. We had an interview out today with me and 2 guys talking the luxury market. That would be Sleepwell Capital, the anonymous account, as well as Leandro from Best Anchor Stocks, 2 quality analysts along those lines. That was a fantastic discussion. Hour 50 minutes, but you don't have to listen to we would enjoy if you listen to the whole thing, but there's good snippets if you just kind of come in and out. There's a lot of good stuff there on the luxury market. We're going to continue with the luxury market this month. We got LVMH coming out. Then we're going to be doing Ferrari and then Hermes. All right. That's it. The disclosure. We are not financial advisors. Anything we say on the show is not formal advice or a recommendation. Ryan and I and any guest on this podcast may own securities discussed on this episode. May have owned them in the past. We may own them now. We may buy them or sell them in the future. None of this is investment advice. All right. Thank you, everyone. And we'll see you next time.